This podcast is created for farmers and powered by Pioneer Agronomy to bring you agronomic insights and proven solutions to fuel forward-thinking farming.
Good morning and welcome to the June 5th edition of the Pioneer Agronomy podcast. I'm Brian Shrader, agronomist on the eastern side of Indiana, joined as always by my co-host Ben Jacob from southern Indiana and Carl Joern from western Indiana. Good morning, guys.
Morning, Brian. Morning, Carl.
Howdy, fellas.
Hey, guys, we have had a little bit of crop progress this week, I think. So maybe quickly, before we get into it with our guest, who I am very excited to talk with today, something very different for the podcast, I think. And so hopefully our listeners will enjoy that. But I think, as always, maybe we should start with a quick crop update from each of our geographies. So, Ben, let's start with you. Unfortunately, I'm afraid you might be the person that has the most yet to go in terms of planting progress. So maybe we'll start with you to see what the update is and how things are going.
Yeah, it's starting to feel a little bit like Groundhog Day this spring as we sat down on usually Monday morning to record these. You know, we had rain last week. The timing was a little bit different. Instead of midweek, it happened Saturday, Sunday. Actually, we had some midweek too, but they all run together at this point. So we're not setting in that much of a different spot than we were a week ago. Probably overall across the area I cover, somewhere around 75 to 80% of the acres are in the ground. The northern part of my area, north of I-70, is in a little bit better shape than everything south. And you know, the tough thing at this point is that all the driest ground we have is already planted. Right? And it's waiting on the wet holes and the river bottoms to dry back out. And the challenging thing about that down here is that if you're along the White River and Indianapolis gets 3 inches of rain, the White River comes out of its banks. You know, the same thing for the Wabash. If Lafayette, anywhere where there's a bunch of pavement, if they get rain, you know, the river gets big and it creates a challenge. So we're still sitting in the same spot, but outside of a slight chance of rain midweek, this week actually looks better, and the heat comes back. So maybe we can burn the moisture out and put a bow on this year and move on. It would be nice. So
yeah, for sure. Carl, how about you? Much different from a week ago when we visited?
Yeah, fortunately, we all kind of knew that Saturday was the driving deadline for a lot of folks, and we were able to get a lot of people that were behind, quote unquote, were able to wrap up Friday evening. So I'd call us around that 95, 99% done here. Beyond that, there are some operations that they've had some wet pockets that have stayed wet, you know, like Ben had mentioned, you just have enough of those consequential rains that are keeping us out of the field. So we may take a little bit of prevent plant in my neck of the woods, but surely nothing near the orders of magnitude we had in 2019, 2020 up my way. So we're feeling pretty good, but probably not going to fill the cup all the way up here. I'm curious about to the east, Brian, what do things look like?
Yeah, we're probably a little bit in the middle, actually, like normal between what Ben described and what you described. In my own personal geography that I cover that we've talked about on a pretty regular basis, I'm probably 95% planted on corn. Soybeans are closer to probably 90, not quite. I haven't had a conversation yet about prevent plant, but as you all will recall, we talked about June 1st being the deadline for changing maturities, both in corn and soybeans. And so that conversation has started in some of those areas for me that have not been planted yet. We had a little bit of progress last week, but not a lot because of the rain midweek, and then Saturday has put us out. I do expect folks to try to finish. I don't think prevent plant will be large. There probably will be a handful of acres that are. I think the bigger thing for us is our colleague Lance Shepard to the north. Lance has got quite a bit that still has to be done. I would say, Ben, he's probably very much in the same situation you're in. And so on the east side of the state, Carl, I think the further north you get, the more challenging planting has been and continues to be. With that all said, I will tell you guys that the crop progress in the southern part of my geography is amazing. The corn is beautiful. It's up. Stands are good. And so I'm excited about some of that early crop that was planted in terms of yieldability, but we've still got stuff that does need to go in the ground. And so that's the situation we're in, at least on the east side of the state, as we go. And so With that, I think we'll transition. Would like to welcome our guest today, Chris Taylor. Chris is the Senior Economics Manager for Corteva. We have had the opportunity as agronomists to hear Chris on a number of occasions share with us kind of the other side of the coin, if you will. As agronomists, our job's often to make sure and ensure that we can get as many bushels into the bin as we can. But from a marketing standpoint and economic standpoint, we aren't always the best folks to visit with. And Chris and folks like himself within Corteva and within the industry are an important part of us finishing the loop on those return on investment conversations that we often have. And so, Chris, welcome to the podcast. Thanks for joining us this morning.
Thank you, Brian.
Chris, maybe let's start here just for folks that are not familiar with you and your work. Can you share with us what the Senior Economics Manager for Corteva does and some of your responsibilities that our listeners might be interested in knowing about from that perspective?
Certainly. Most of my day-to-day job is to do the short and long-term economic forecasts that Corteva uses in its business planning globally. So things like crop area, supply and demand, prices, the livestock markets, biofuel, all those interesting things on a global basis in the markets that Corteva operates in.
So maybe we'll just really jump into this. I know you have shared with me in our correspondence that this is really kind of an interesting time for us to be talking to you, given the fact that we've had some, I guess you'll call it macro things that have changed, I think is the term that you used with us. And then also we recently got the USDA numbers for 2024. And so maybe let's just jump into that. Talk to us a little bit about these macro numbers that you talked about, these general growth numbers and the dollar and some of those things, and how that's really impacting what we're seeing right now going on.
Sure. When I use the term macroeconomics, I really am talking about normal general economics, non-ag economics. And we're still feeling the impact of macroeconomics in the ag sector as we've come out of that COVID period. Our forecasts for 2024 and 2025 economic growth, meaning GDP economic growth, is positive here in 2024 and 25, but it's going to be slow growth. All right. Our numbers don't suggest that we're going to see a recession. We may see some very slow quarters, but we don't see any recessions on an annual basis coming at us. What has been persistent and has been a concern for the U.S. government and the Federal Reserve also is inflation. Inflation has stayed higher than really what the Fed is comfortable with. The main tool that the Fed uses to fight inflation is interest rates, and they've raised interest rates pretty quickly. They've kept them higher than they have here in the recent past. The market expects right now that we will see 3 interest rate cuts by the end of 2025. So as you watch the news and you hear about rates being higher for longer, we're not talking about interest rates going up. We're talking about the Fed waiting longer to cut interest rates than maybe they have in the past under similar situations. The main impact, which we can talk about here in a minute for agriculture, is that those high interest rates have given us a very strong U.S. dollar compared to recent history here.
Yeah, Chris, I guess when we think about interest rates, I think the key thing is, hey, I've got a loan for our growers. A lot of times it's the operating loan and that's the interest rate they pay back. But obviously the conversation about interest rates and even the Fed holding these is much larger than just repayment of a loan by an individual. Can you talk to us a little bit about how that kind of goes throughout the economic countryside, if you will, the bigger impact of those interest rates beyond just my payment back for whatever I purchased?
Sure. As you mentioned, most people's focus is on their short-term debt obligations, but it also impacts longer-term debt obligations like land payments. I think where we've seen the biggest impact here in the ag sector outside of the grain market is in the investment decisions that the ag sector is making right now. We've seen people invest in grain storage, grain processing, and those types of longer term investment ideas. They're a little bit higher return, which you need with higher rates, but they're longer term. So we've seen kind of both sides here, people working to make sure they get things paid, but also investments leaning into longer term investment on the other side.
You had mentioned the dollar. Obviously, that's an important thing. As full disclosure, I understand it just a bit, but can you talk to us a little bit more about why having such a strong dollar impacts things economically for both the United States, within the United States, but also abroad?
Sure. Most of the growth on the demand side for global grain and oilseed markets has been in the export markets, global trade. When you're thinking about the US dollar, the theory is that the stronger our US dollar is, the less competitive we are, that our ag products are on the global market. And the weaker the dollar is, the more competitive we are. So here 4 or 5 years ago, when we were really exporting a lot of grain through the early parts of the COVID experience, the dollar was much weaker than it is now. And as we've raised interest rates, that makes people more interested in holding US dollars, which increases the demand for dollars and makes the dollar stronger. Why that's key right now, as I said, export demand globally is the big demand driver for the ag sector. And we're seeing a strong dollar and a bit less competitive exports out of the United States at the same time that we're seeing very large crops coming out of South America and also coming out of the Black Sea region, Russia, for example. Those regions grown big crops. They're very interested in exporting those crops. So we've got the supply competition, but we've also got a competition on the currency side, and a strong dollar has made us a bit less competitive there.
We talk a great deal about the politics of money. It's always there. Do we see an impact with this being an election year, regardless of party affiliation or anything? Is there an impact globally around this strength of the dollar because of the fact that we are in an election year?
So I think the election year dynamics have a couple of impacts on agriculture. The first being it makes the Federal Reserve Bank, but also our U.S. government, a little less willing to make big decisions in the short term, right? They'd like to delay those till after the election, right? So that slows decisions on interest rate raises or cuts, slows decisions on things like farm policy, the new farm bill, and slows things like trade negotiations. Now, at the same time, some of those countries I mentioned that are competing with the U.S. on the ag export market, they're happy to let their currencies be weaker here for a minute, especially when they have bigger crops. So it's not that their decisions are being actively impacted by the election as much as they're happy to let the process work its way out.
Chris, you'd mentioned the Black Sea region, and obviously there's been a lot that's taken place over the last 3 or 4 years in that area of the world. Curious your perspective when it comes to wheat demand and wheat prices. My understanding, we're getting ready to take the wheat crop off here. Some folks are starting today that are listening to this podcast. Others will be another month yet. My impression is that the U.S. seems to be a bit of a price leader when it comes to wheat, and maybe that makes us less competitive on the global market. Could you maybe unpack that for us, why that is the case here at home?
Sure. So the big force in the global wheat market the last 2 years has been Russia. Russia produced 2 record wheat crops and exported a record amount of wheat the last 2 years. They've exported more wheat than the market really believed they even could. Right. Now, at the same time, Ukraine's production has been under pressure. No doubt the war has impacted their exports, but they have been exporting a lot more wheat than what the market expected also. All right. So that Black Sea region has been a major force in global wheat exports. They've been very competitive on the price side, and any country that has been willing to deal on the food side or deal with Russia on food imports or exports has purchased a lot of wheat. Here in the U.S., it's a bit of a tale of two markets. We're down on winter wheat area this year. In the hard red belt, we've seen some more weather pressure and pressure on yields there for the upcoming harvest. On the other side, the soft red crop looks like it's going to be pretty good, right? The yields look pretty good in a lot of areas. So thinking about the wheat market here, there's a fair amount of resistance in that July contract as you approach $8. I don't know that we're going to get up that high. If we do, it'll be a global driven problem. Russia's had some weather issues. They've been very dry. They had some freeze issues this winter. USDA expects their crop to be down a little bit. They expect their exports to be down a little bit. That's helped support global wheat prices, but also wheat prices here in the U.S. I think we're going to struggle to export wheat again here out of the U.S., but with a bit of a smaller corn crop here, a bit of a smaller corn crop globally, I think wheat will work into the feed market a little easier maybe than it has the last couple of years.
Sure.
So, Chris, you kind of walked us through the wheat. Maybe knowing that the USDA have shared their numbers for 24, maybe we could do the same thing with corn and soybeans here briefly, just to get an understanding of what you're seeing and what the numbers are telling you.
Sure. On a global basis, USDA is expecting a little less corn area globally this year and a little less corn production. That's largely being driven by the U.S. Their current estimate says we'll be down about 5% on corn area here in the U.S. The crop largely got planted on time, especially in the western corn belt, the central corn belt. It's really the eastern corn belt, as you fellas mentioned earlier, where we've seen some of the slower planting progress. The trade-off for that is the reason things were delayed in the central corn belt and a little bit the western corn belt is because we've had a lot of rain. Right. And those were some areas that were heavily drought impacted the last couple of years. The market had been concerned about yield prospects. More rain pushed planting progress back a little bit, but has made, I think, the market more comfortable about yield outcomes here for 2024. So the market at this time perceives the supply side to be adequate. On the demand side, livestock demand for feed has been pretty stable. We've seen some rebound in the pork herd here. Cattle has been pretty stable. We're got a little concern on the poultry side because the bird flu issue that we normally see in the winter is just now cropping up here in the spring. But by and large, that feed demand looks pretty stable. Demand for ethanol has been very good. Margins have been pretty good since harvest. This is likely going to be one of the top 3 years ever for ethanol production here in the U.S. Our concern is, as I've mentioned, on the export side, we're a little bit behind the USDA's estimated pace for the 23 crop. We're behind what they say we're going to export on sales for the 2024 crop. That's where the risk is, and that's where I'd have people watching here the next several weeks to see where that develops. Similar to the wheat market, right now, I think most of the market is looking at a sales target somewhere between $5 and $5.10 on the December contract. I'll tell you, it appears there's a lot of corn for sale at that level, a lot of 2024 crop for sale there. So you'll have to be on your toes if we get close to that level, because I think there's going to be a fair amount of corn move. But that appears to us to be the target that the market's using right now. On the soybean side, a little different than corn and wheat. On a global basis, soybean production is expected to be up in 2024. And here in the Western Hemisphere, it's expected to be way up. Okay. As I mentioned, global export competition extremely stiff, especially out of South America. China has been very willing to buy beans from Brazil because they've been cheaper. We don't have very many 2024 crop beans on the books here out of the U.S. to China. It's one of the lowest levels we've seen in 20 years. So again, the export side is where the risk is. Domestic crush, very strong. We're probably going to set another record for domestic crush here in the U.S. Again, meal going to the livestock side, a little more oil going to the biofuel side. I'm not quite as optimistic on price market for soybeans as I maybe am on corn and wheat, but I can tell you there's a lot of beans for sale, just above $12.50 and $12.75 on the November contract for 2024. That appears to me to be where most people have set their initial sales targets.
Chris, we've talked a fair amount about, what folks are expecting to market their grain for come this fall, late fall, early winter. As you look at the overall landscape, talk to us about the impact of sustainable aviation fuel and what that could mean for our sector of the economy, and what has been the most recent updates in that department, if you would, please.
Sure. Our view for sustainable aviation fuel and also renewable diesel and renewable road diesel is that both are long-term positives for the ag sector. Where we caution folks is it's going to be slow growth, right? This is a different type of policy than we saw in ethanol, but we do see it as a long-term growth opportunity. On the renewable diesel side, the opportunity there is for soybean oil, canola oil, and also corn oil out of the ethanol process. You've probably seen in the news recently, the United States has been importing a tremendous amount of used cooking oil from China and other places for production in biofuel. And there was some discussion around possibly putting a tariff on that material to kind of keep things level and keep things equivalent on an energy basis with some of the other tariffs that were being applied to China. Okay. I don't think that's going to happen in the short term. I think they're going to let the industry build out here domestically before they start to adjust some of those things. But I do see that as a long-term growth opportunity. On the sustainable aviation fuel side, again, we see that as a long-term growth opportunity. The news there has been that there's a lot of corn acres that probably won't qualify as the policy is written now because they don't use all of the sustainable ag practices as defined by the policy and as defined by USDA and EPA here in the short term. We're in the early stages of this. There's a lot of negotiation that goes on over time. I'm sure all of your listeners can think about where ethanol is now compared to where it was 15 or 20 years ago and how differently things look now to the past. This is all a negotiation and an evolution. Again, the policy is different. So my summary here is that we see it as a long-term positive, but it's going to be a slow growth, especially as compared to the growth we saw on the ethanol side.
If you were to take the balance, their electrification aspirations of the U.S. transportation market, how would that have an impact on the ethanol market and things of that nature?
Yeah, I think the general thinking in the market on electric cars is that it would be a long-term negative for ethanol. Now, we have not actually seen as much of a negative impact on ethanol production here in the U.S. as you might expect. Electric cars really have not taken fuel demand down much. We're seeing most of the impact from just fewer miles driven post-COVID. The other interesting thing about the ethanol market here in the U.S., I mentioned we're likely to see one of the top 3 ethanol production years ever. Ethanol exports have been extremely strong, right? So as we use less here in the U.S. for road use, there's a lot of interest in that product in other countries who are not very far down the road on electrification to use ethanol as an air quality additive for fuel. So Here in the short term and the medium term, the outlook for corn ethanol is still pretty good. And I think the market's going to keep working for sure, the industry is going to keep working toward trying to get more corn ethanol to qualify for SAF longer term.
There are a lot of hoops, I think is the way to say it, to jump through in order to meet all of those qualifications. The acreage that actually would qualify today, at least as I drive around my geography, would be minimal at best, I think is probably the most appropriate way to put it, Chris. I think, we have some cover crops, we have no-tillers, but we also have a lot of folks that are only doing one of several of those practices that have been laid out thus far. We've talked a little bit about the Black Sea region. You had mentioned some other things. We talked about China and their exports with Brazil. Other things globally that would be important for us to keep in mind or for our listeners to understand as we sit here today, impacting where we're at commodity-wise, pricing-wise, or even in the short term?
Sure. I think from a short-term perspective, the market entered 2024 thinking that we were well oversupplied with grain and oilseeds on a global basis. As we've seen some production challenges around the world, I think the market's perception now is that we're just adequately supplied on grains and oilseeds. And that's what's given us the opportunity for a little bit of price action here on the wheat side, especially, and on the corn side. I think there's still quite a bit of soybean supply to chew through before we see much of a rally there. That's kind of the short-term outlook. And I think on the long-term outlook, the critical thing that I've pointed out to our management here and also our stakeholders is demand for ag products is still very strong globally. Grain, oilseed demand growing, meat, dairy demand growing on a global basis. That long-term demand is a very critical piece of the picture here. It hasn't changed much, even with higher prices or lower prices. It's really been a production issue here in the short term that the market's been trying to figure out.
Chris, you've touched a lot on the commodity side of things, which is where our bread is buttered in terms of farmers in the U.S., but we're starting to see perhaps new opportunities for revenue at the farm gate, considerations like carbon markets, other sustainability initiatives, a lot of legislation that's in place for some of those types of aspirations. Curious your perspective on behalf of Pioneer, just your outlook, how folks should evaluate those opportunities and how it makes sense to integrate in their operation and things of that nature.
Sure. So a lot of these initiatives are still pretty early in their foundation. And my advice to folks, usually not knowing the specifics of what they're looking at, whether it's a carbon pipeline on their land, whether it's a sustainability effort on their farm and changing practices, there's really two pieces of it. Is the revenue enough for you to change what you're doing and to net you what you think is of value for any change that you're considering in your operation? The second piece is, are you comfortable with who you're dealing with on the data side? And who are you willing to share data with or trade data with? When you look at the carbon markets here, the last 5 years or even 10 years, there's been a lot of volatility. There's been a lot of up and down in the willingness of carbon market participants to pay for carbon or even stay in the market. Right. So the market's not very highly developed. I think it's one of those things that producers need to stay on top of in terms of what's the current thinking and what's the current practice and what's currently available, and have a pretty sharp pencil if you're going to consider entering into anything long term that changes your practices. Things like the Farm Bill, things like the crop insurance program, there's some pretty clear value there to pursue yields longer term, right? And some of these other programs, I just tell people, make sure that long-term value is there before you do anything that's going to impact some of those other programs that you're involved in.
I guess since you mentioned it, the Farm Bill legislation, we've been kicking the can down the road here for a little while. Assumption fair that we'll continue to do so in 2024. Do we have any indication of where the winds are blowing at this point?
This is another one where it appears like they would prefer to wait till after the election to do anything concrete. Where I am comfortable talking here is to say, I think the commodity titles in the Farm Bill will look pretty close to what they do now, maybe a little better for some crops. I think it's almost certain that the nutrition piece of the Farm Bill will see an increase and possibly a substantial increase, depending on what part of that nutrition title you're interested in. I think the main thing that would impact and benefit our customers is on the commodity title side and some of the reference price adjustment discussions that have been discussed there and are being supported by some of the commodity groups. I think that would be a long-term benefit. It's a budget issue, right? And I think probably does depend on the outcome of the election, especially at the congressional level.
Chris, I'm loaded for bear here. If you'd be willing to indulge for some kind of miscellaneous type of topics outside of the commodity side, Brian, if that's okay with you. I was looking through an old publication. It would have been made in the fall of '88, and the title was "Land Prices on Hold Following This Year's Drought." We haven't talked about land values, rent, cash rents. How do we evaluate those things within the wide world of Pioneer? And maybe for those that are on the line listening, you're not in their backyard, but what do you think about how you'd advise somebody as they're setting up their farm for success for the future?
Sure. So we've seen land prices stay very strong here into 2024. We've seen the number of sales slow down. We've seen some more no sales, but land prices have held very strong. So kind of in contrast to that 1980s market where you had much higher interest rates, much higher debt levels, some extremely variable crop and farm income in that decade. Land values have held pretty well, and I would say land holding operations are in a much better shape than they were in the 80s. So thinking short term here, where I do see some impact probably sticking with us is on cash rents. We know cash rents tend to lag as land prices go up. They tend to lag if land prices come down. So I do think we're in for another year or two here, most likely, of some fairly firm cash rents. Right? Thinking longer term in terms of setting operations up for success, they have seen their asset base increase quite a bit. One of the things that's been discussed, especially around this election, is changes in estate tax levels, cost basis application, that sort of thing. It's really tough to give somebody specific advice on that type of succession planning, but certainly ownership structure and how you will fare if there's a change in how this estate tax is approached, I think is pretty critical. I can speak for my family farm here in Iowa. We've started that process here 3 or 4 years ago and have been going to seminars and doing work to make sure we're covered kind of no matter what happens here through the next couple of election cycles. We're in kind of a unique place here in agriculture where we've seen the asset base value increase quite quickly, but we have not seen the tax calculations change in the same proportion, right? And so I would strongly encourage anybody to make sure you're at least penciling some of these numbers heading into this election and likely heading into the 2028 election as well.
Brian kind of teased at the beginning how we're qualified to help get the bushels in the bin, but not so on the way out, which I agree with on the whole. But it's always impressive how many folks you ask, how do you make your grain marketing decisions? And a lot of it is more or less how an agronomist would. Sometimes it's a decision at harvest. Maybe a leading edge grower is working with somebody, but I'd say the vast majority are somewhere in between, and there's not as much rhyme or reason to it. If you were to give somebody advice as they're listening to this podcast of either how to learn the fundamentals or how to outsource that opportunity to ensure success for their farm, what advice would you have?
The first piece is for those operations that are utilizing crop insurance or utilizing it heavily, make sure you're factoring that into your marketing plan and leaning against that when you can. For those operations that have never had a plan or aren't working with anybody, my advice normally is to buy a newsletter or two and at least follow what they're suggesting. Now, whether you make all the sales they're talking about when they say to make them or not, that's still your decision. But it does help people, I think, to say, okay, most of the advisory services are saying you should have 30 or 40% of your corn sold for the 24 crop by now. You should have 2/3 of your wheat harvest sold by now. At least you know when those decisions are being made and kind of what the market thinks is going on. I do believe in the idea that you can turn a certain portion of your production over to somebody to market it for you or make those decisions for you. You don't have to turn over the whole thing. You can do percentages. Yes, there's a fee involved in that for sure, but at least you can see how somebody who does it for a living, when they're making decisions and why they're making those decisions.
Sure.
It's an educational process, especially at first. You can gain a lot of information just seeing how and when they make their decisions.
Chris, that leads into a question that I had for you. We've talked about global weather. We've talked about the political implications of different decisions that are made. We've talked about global politics and all of these things. Are there places that our growers can go to gain all of this knowledge? I guess you mentioned the newsletters, which do come with a fee, but are there some free places? I mean, just like we talk about on a pretty regular basis with weather websites and things like that, are there the same type of websites or resources that are free to folks who may not be familiar with them that you would send them to gain much of this information?
Sure. Not to sound too self-serving here, but Purdue's website is pretty good. Illinois has got some very good information, as does Iowa State and Missouri. Some of those kind of middle of the country universities do a pretty good job, especially on the medium and longer term outlooks. Their business is not the short-term price outlook. I don't have too many public sources for that type of stuff, but for sure, some of the longer-term and global topics that you mentioned there, I think those four sources would be pretty good.
Okay, great. Well, Chris, I guess anything else that we haven't covered today? We certainly appreciate the time that you've spent with us, but is there anything else that you'd like to make sure that the listeners of the podcast hear today that we've not touched on so far?
I think my last point would be here for the 2024 crop, there are going to be some marketing opportunities through the crop year. But this is going to be a year that was different than 21 and 22 and even 23. This is going to be a year to make sure you're watching the market and staying on top of your marketing for the 24 crop.
Hey, Carl, Ben, anything else that we haven't visited with Chris about that we need to make sure that we get on the books for folks?
I mean, I think you could continue this conversation for another hour or two, Brian. We'd just be chasing lots of squirrels and getting a layer deeper with Chris. So just grateful for the opportunity to introduce this topic to the Indiana Pioneer Agronomist listening contingent, and always learn something when we hear from the good folks at Pioneer within the marketing department. And Chris, thank you for your time.
Yeah, thank you, Chris, very much. This has been very enlightening for a guy who is very reticent to offer any kind of information when it comes to the economic side of the business. I'm just going to refer folks to the podcast that we did today when they asked questions about marketing or global dynamics. So we certainly appreciate the time. Hopefully, maybe as things change or we get back into harvest, maybe this winter we can have you on again to get a little bit more of a update on where things are at. So appreciate the time today. Appreciate everything that you do to keep all of us informed within the organization as well. And so just thank you for that time. Ben, Carl, I certainly think this has been a valuable day for us in terms of learning some new things that are not necessarily associated with the podcast. But if somebody wants to get a hold of each of you, Ben, how could they do that?
Yeah, Brian, I agree with you. And thank you, Chris, for coming on. Folks that watch this on video will say, well, Ben was awfully quiet today. And yeah, that's because it's hard to talk when you're taking notes. So if you want to find me and follow along with what's going on in Southern Indiana, you can do so on X at the Ben Jacob or on Facebook at Ben Jacob Agronomy. Carl, how about you?
Same places, at C. Joern on Twitter and at C. Joern Agronomy on Facebook for finding things like Asiatic garden beetle, first blooms in your early planted soybeans, and Holcus leaf spot for those of you that are questioning, nice. What on earth are those white splatches all over my corn leaves? So that's what I got for you. Brian Shrader, yourself?
Sounds like a Harry Potter disease there, Carl. So for me, if you want to get a hold of me, you can find me on Instagram at B_K_Shrader. As a reminder, if you like the podcast, please be sure to like us. We'd appreciate it. That helps us a bunch. As always, give us feedback and let us know what you like or what you don't like about the podcast. And if you got some ideas for an episode, please be sure to let us know about that. Appreciate the time. Hope that you're having a safe spring thus far, and hope that if you haven't had some crop progress that you're able to get that in here before we talk to you the next time. Thanks again for joining us for the Pioneer Agronomy Podcast.
Thank you for listening to this episode from the Pioneer Agronomy team. Be sure to visit pioneer.com/podcasts to access additional episodes and learn more about our extensive on-farm data and innovative digital tools that are fueling forward-thinking farming.